To understand the use of blockchain in financial world, we have to understand how this today's financial world works. Today's financial world works on trust. You lend your money to banks because you trust that your banks are going to return this money when you need them. But what happens when the trust is broken? Would you still lend your money to your bank? Would you still keep your deposit, your savings into the bank? No, right? So the entire financial system is based on trust. Let me tell you another example. When you go to buy grocery at the store, you use your card to make the payment, and your card is issued by, let's say, ICICI Bank, whereas the shopkeeper has a bank account in HDFC Bank. So now, to be able to transfer money from one bank to another, there are multiple parties involved, at least 6 parties for sure. One is you, other is a shopkeeper on the other hand, and then their banks, your bank and their bank. So that makes like 4 parties. Fifth party is the card issuing network company and the Reserve Bank of India. Total 6 parties are involved. And when you send the transaction, the money settlement is not real time. That means your money goes to shopkeepers just in the books, just in the records. It's not possible that in real time the banks send the cash to the other bank. No. So that happens once in a day maybe, but not for every transaction. So why this you immediately get a confirmation that your money is deducted and the receiver get a confirmation that the money is added to their account? That all happens only in the books, and that all happens in book. That is all possible because all the 6 parties involved in the transaction trust each other. There is a huge amount of trust between ICICI Bank, Reserve Bank of India and the MasterCard network. But that trust is broken, if that trust is damaged, or for any reason if one of these banks fail, the entire process is going to be meaningless, and the process is going to fail. There won't be an end of day settlement between these banks, and for that reason they wouldn't in future be able to do the real-time settlements because the trust is broken. So now you might be thinking, why so much of pessimism? Do banks really fail? The answer is yes, they do. In last 3 years, in India alone, 3 banks have failed. You must have heard a lot of news around it. One was PMC Bank. PMC Bank was a regional bank with a lot of presence in Maharashtra. Lakshmi Vilas Bank is the second, which had a pan Tamil Nadu presence and with little presence all over India also. And the third bank, which made a really big news, was Yes Bank. Yes Bank was present all across India, and it had big customers. Even Tirupati Balaji Trust had an account with Yes Bank. So having such big customers, the bank failed. So bank failures is a reality. This is about India. Now talk about USA. During 2023 alone, there were 4 major failures in the banking system. And if you look into the last decade, the number is even more. Especially the big bank failures happened around the recession of 2008. So banks failure are reality. So what's the solution? What happens if your banks fail? That means your banks are not able to repay your deposits. So this brings trust deficit in banking system. This means that the person who has suffered or whose trust is broken would not want to keep their savings with bank anymore. So what's the solution? If you don't want to keep their savings with bank, where would you do? Who would you trust? So blockchain solves this problem. In blockchain, there is no single point of failure, single point that can cause entire system to fail. In blockchain, every node or every block is interconnected, which means in the previous example where I explained with the shopkeeper and you, here every node is interconnected, which means your bank, your card issuing network, this is MasterCard, Reserve Bank of India, you and the shopkeeper are also interconnected. That means if you don't trust your banks and Reserve Bank of India and MasterCard network, you can send your money directly to your shopkeeper without involving these parties, because a shopkeeper has its own wallet address, you have your own wallet address, and you can send your own Ethereum coin or Bitcoin to the shopkeeper directly without involving these banks. Banks would still be there, but they are optional. I mean, if you trust your bank, you can go through bank, and make your payment. If you don't trust your bank, you can directly make your payment to the person whom you are transacting with. And the settlement would be real time. I mean, true real time settlement, not on books. I mean, the real coins will be transferred from your wallet to their wallet. You transfer to them and they will be able to verify it. So that's how money transfer works in blockchain system. Another example is that when somebody gives you a check and says that, hey, I have like 10 lakhs rupees in my account, so I'm issuing a check, and then you offer your services to them trusting that you will be able to encash that check. But it turns out that that man who issued you the check doesn't have any money in their account and your check is not encashed. So there was no way to verify originally when they issued the check to you that they have any money in their account or not. So blockchain also solves this problem. If somebody gives you a check or somebody shows their bank statement, here is my bank statement, I have this much of money in my account, you have now way to verify the bank statement is real, fake, forged. All those is possible because blockchain is complete transparent system. You can see all the transactions right there on the blocks in the nodes. So that kind of transparency the blockchain system brings with financial transactions, which is absent in the today's world, and we badly need those transparency in the system today. And that's about use of blockchain in financial industry. See you later with another use case of blockchain. Stay tuned. Bye.